To build anything that truly lasts, it takes time.
Why are markets stuck in a limbo? What will take for markets to implode or explode? And what really could be that shakeout news or trigger for the market? Let's take that conversation forward. Nishal Meshwari joins us now. Nishal, nice to have you on Nifty now. Thank you for joining us. I don't know from where to phrase my question. इस बोरिंग मार्केट में क्या बात करें? Your smile is telling me you have no answer also. This time I think he's on mute, so I think he has to unmute himself.
Sorry.
Oh, I thought you had no answer for the question. I didn't know you were on mute. Yes, please go ahead.
I really had no answer to that question.
So you can press mute again. But what will take for markets to come out of this state of limbo?
I think two important news are around the corner. One is obviously about the Trump tariffs. I think that's an important one. And I think the whole market is waiting for that. Which way the वो बोलते हैं ना ऊँट किस करवट बैठेगा is the situation right now. So whether we'll get a normalized tariff or whether we'll get another 10% along with BRICS. So I'm saying that's what I think the market is waiting for with bated breath. The other important thing is the earnings, but that is going to be sort of lackluster in this current quarter.
So initial for an investor, one would say this is consolidation. But for a trader, you would say that this market is in a no trade zone right now?
So I do not have much view on the trading side of it, basically. Yes, but from an investment point of view, yeah, this is sort of a consolidation in the market.
All right, indeed. Yes, the markets have been consolidating and we have been discussing that with our technical experts as well. So let's go across and understand from them that any new data points that they want to flag off, given the fact that today is the weekly Nifty expiry as well. And with this, let me also welcome on board Kunal Bothra, who is live with us from the studios itself. Kunal, your take on the markets, because once again we have been asking you the question again and again, but even we are now done with this kind of a consolidation.
Yeah, it's a phase of the market where the markets are consolidating, but I think today's expiry and very interesting data points. I think for the first time in the last 4-5 days, we've seen the put call ratio hitting zones of 0.5, 0.55 on the Nifty, and that generally is an indicator that the markets are entering into the oversold territory, which was not the case in the last 5-6 days of this consolidation for the Nifty. So which means that say closer to this 25,300, 400 levels where we are, or maybe another 50 points on the downside, we could be tapping back into a very strong support territory for the Nifty. What we've also seen is a blend of short covering which has come back again today. For example, yesterday the metal stocks were the ones which were underperforming sharply. Today you've seen many of the metal counters making a bounce back, Tata Steel, Vedanta, Jindal Steel, etc. So which means that the market is not losing its texture, but it's just that the stocks which are underperforming on a previous day, they generally go into a short covering mode the next or the subsequent day. That generally is an indicator that the markets are still ready for a consolidation. But with the put call ratio hitting the oversold territory, I believe that over the next couple of days there could be a very good opportunity where traders or contrarian traders could look at a contra buy on the index.
Okay, so contra buy on the index, but any stock specific ideas for the last hour of trade, Kunal?
Yeah, I think quite a few. In fact, over the short term basis, I would probably believe two stocks which are looking attractive. Container Corporation is something which I've been highlighting. That's a stock which has done exceptionally well. 630 was the target which I had mentioned. So that's a chart which even at current levels looks attractive for another 20 points on the upside. And Bajaj Finance is coming back into a breakout mode, and for a surprise, because over the last few days we'd actually seen the stock struggling. But then I think now at close to this 940, 950 levels, Bajaj Finance is something which I would probably want to bet on from a current perspective of 975 as a target.
Okay, so 975 is the target for Bajaj Finance, but we also kickstart the IT earnings season this week with TCS expected to report its numbers. Mr. Maheshwari, your thoughts on the IT sector and its expectations from earnings this time? Although the expectation is that perhaps we could see tepid growth on a sequential basis. What will your view be on the sector?
Yeah, I think so. Basically, I think it's going to be tepid and tepid growth, both for the large caps. There might be some good earnings growth in some of the mid cap stocks, but largely it is going to be tepid. And I think TCS, the issue is now market worried about the margin side of the business, basically. And as you may be aware, that one of its major contracts with BSNL, that is actually getting over. And that's why the market was expecting that the margins should have gone up. But what is the expectation is basically that the margins are going to be more or less similar or down. Now that's a worry basically, and I think market is waiting to see how the numbers are.
All right, so that's the take coming in on the IT space. Not much is expected indeed, but with this, let's also go across to my colleague Pulkit, who is standing by with the number crunching on TCS, and he's here to tell us what the street is really penciling in when it comes to this IT major. Pulkit.
If we talk about particularly with this TCS, the revenue is expected to increase by 0.9%, and in terms of USD, in INR terms, we are expecting an increase of around 0.1%. For EBIT, it is around 0.3%, and for profit after tax, we are expecting a decrement of around minus 0.2%. The key factors that are influencing the above numbers, first is the exit of low margin BSNL deal, and it may provide a partial cushion to EBIT margins. Deal wins are likely to remain steady, but conversion to revenue may remain sluggish. There are some key monitorables that we can focus in the management commentary. First one, majorly on the demand part, how the demand is shaping up. For FY26 guidance, the total deal win amount, the headcount and attrition rate, Gen AI trends, tariff impact, and US and Europe business outlook. One more thing that need to be focused is the segment-wise revenue. BFSI segment, we are expecting to remain stable, but if we talk about the retail, auto, telecom, that may remain soft.
Okay. Could it be a case of no expectations and a strong move? But if that is the case, I think that's a technical move. The problem with IT services is that there is scale, skill, and size. The scale is getting challenged because of AI. The skill is getting challenged because of AI. And size also is now getting challenged in terms of the manpower cost with AI. So it's one of those all-round disruptions where if it is a double whammy or triple whammy, whichever way you want to look at it, the sector is getting crunched. So IT companies, in order to protect the shareholder capital or shareholder value, they keep on doing buybacks, and then they keep on doing buying their shares from the open market, and they keep on giving a lot of dividend. So that is keeping those stocks alive in terms of respectable levels. But giving money back to the shareholder out of the cash which you're generating is not the best way in which how future growth businesses are getting created. That's my limited bit. The other business which has done exceedingly well right now, Nishchal, is solar. And it's become more like a fashion word and a buzzword. If you are not in the solar business, and if you are if you're in corporate India, if you're not in solar business, that means there is something wrong with you. Similar kind of a thing, Nishchal, happened in 2008. If you're an Indian company not in infrastructure, something is wrong. 2020, if you're an Indian company not in IT, something is wrong. Is solar leasing what could be called as this, bubble and trouble level?
So as far as I think, I agree with you. I think solar, if you really look at it, there is no real moat in the business as far as solar equipment manufacturing is concerned. Largely, there is cell, and then from a silicon onwards, I think there are very few companies across the world who manufacture the silicon wafer itself. And most of the other companies are either manufacturing cells and thereafter the modules. So module capacity is already, India is now in this current year is exceeded the demand. In the cell capacity, India will exceed the demand, the supply will exceed the demand in 27. So I think we are more or less there basically, and we have still not seen the two large guys, Reliance and Adani, still selling in the open market. I think Reliance has started selling in the current quarter itself. So you are going to start seeing the pressure on the margins as far as solar is concerned. So I do not understand how these kind of valuations get justified as far as solar equipment manufacturers are concerned. And when they are having a huge a subsidy, both in the domestic as well as in the international market, especially the US. So I think these kind of valuations are unsustainable.
So welcome on board Aditya Arora, who is the founder and multi-asset research analyst at Adilictic.com. Hi Aditya, good to be speaking with you. Firstly, any sector that is looking good to you? Because I believe that on the index front, nothing is really happening. But to help us understand that, are you tracking any particular sector in the markets right now?
Very good afternoon to you and to everyone. I think one sector is clearly buzzing in the market right now, and there's clear-cut outperformance in this sector, and that sector is Nifty Metal Pack. Although index is down about 100 points, but Nifty Metal Index is up about 0.72%. So I think relative strength is clearly present in this sector, and disclaimer, we have also suggested bullish bias in this sector to our clients. An important point to note is that yesterday there was significant underperformance, but that is reversing today. So I think yesterday's low marks an important pivot point for this complete pack. Nifty Metal Pack had low of about 9266 yesterday. So one can keep mental stop loss of 9,200 as the index is not tradable, but sector component look pretty bullish. So I think this is the sector to watch out for. In the coming days, I'm expecting a breakout about 10,000 to 10,200 odd levels. So this is the sector to watch out.
Kunal, why do we have this yes and no moment in metals? एक दिन ऊपर, 2 दिन नीचे, 3 दिन ऊपर, 4 दिन नीचे. Yes and no, right? It is not a conclusive trend there.
I think it's the same.
Market is like this.
Yeah, it's the same with the entire market. There was this correlation with respect to dollar index for metal stocks. That correlation got broken, some time back. And now even with dollar index, I think falling towards 96, 97, the last I had seen, it's not aiding into the metal stocks going into any kind of a major rally as such. So I think it's just about news specific, event specific, stock specific, where you've seen the metal counters. But I also believe that, over the last 2-3 months or so, we've seen a class outperformance coming out from few metal counters. Tata Steel has seen a sea change in terms of price trend. The stock was almost at 120.25 a couple of months back, and it was a huge underperformer in 2024 also. So I think that stock made a very strong comeback. It's now trading above 160 levels thereabouts. SAIL has managed to make a good comeback from 110-15 range to now 130 mark. So the base has increased higher for many of these metal counters. But yeah, I think there seems to be a case where one-off days of price correction and then followed by another day where you see sudden recovery into the stock prices.
Okay, so those are some of the stock specific ideas coming in from the metal sector. But Mr. Maheshwari, if I can come back to you, and what is your fundamental view on the metal sector? We haven't seen any positive news flow that has come in from China. Street is expecting some more stimulus measures, but nothing really has come through or could possibly move the needle going forward. How are you assessing the entire sector, especially in the backdrop of tariffs that we are seeing?
So if you look at it fundamentally, basically, I think non-ferrous seems to be in a quite strong position, both aluminium, copper, and zinc. I think all these three metals basically seem to be on a good, strong wicket as far as demand is concerned. Obviously, the ferrous side of it is still waiting for anything coming out of China and the way the tariffs are going to work out. But the other non-ferrous part basically seems to be in a good place. So I like the non-ferrous, the whole pack. And I think Vedanta, after yesterday's whatever news has come, I think it gives us a good opportunity basically to acquire Vedanta.
I sometimes ask the question to myself, Nishal, and that's a personal question, that why is Vedanta's business holding so complicated? And I don't get an answer. Can you please explain and help me find an answer that why they have so many complicated cross holdings?
That you have to ask the promoter basically, but
No, but
how they have created and structured the business. But I think over a period of time, they have acquired several businesses and tried to consolidate, and thereafter now he's once again restructuring it. So I think that's Vedanta's history basically. We look at the last 25 years, he's done it several times. And again, I think he's unfolding it, putting into separate companies, getting them listed. So I'm saying, I think this has been, if I may venture a guess, that he's trying to find value. So, or unlock value basically. And again, he's trying to do that. So that has been maybe the short answer to this.
fair point. Anything else which you like in terms of a strong dividend play? Because Vedanta is also a dividend play, Nishchal. So anything else which could be called as a classic pure dividend play?
So I think a couple of them, the PSU stock side, if you really look at it, Coal India is falling a bit basically. That looks interesting if you look at it as a dividend play. Similarly, Vedanta's other company, Hindustan Zinc, again, I think it's a 4 to 5% kind of a yield. So I think all these plays are fallen quite a bit and the dividend yields are quite good. And I think, though I do not track it, but the PSU oil marketing companies will also start looking good.
Kunal, give us an idea what we should ask. In this flat market, there are no trends. It's better you tell us some trends. No, I'm struggling. Maybe Srishti and Ashish, I can find one.
Even I'm struggling with any kind of a trends over here, Nikunj.
Aditya, what should we ask you, my friend? I mean, there's just no trends. The bloom, I mean, the screen 1% up, 2% down, 0.5% up, 1% down.
Absolutely. I think on index level, post the Jane Street verdict, market is stuck in a tight range and there's lack of action in the market. But as I said previously, metal is the sector to watch out for. One must track the international triggers right now, as a little bit, very little is happening on the domestic front. So today also copper is inching higher, zinc is higher, lead is also inching higher. So I think this is the major trigger which could, also create a trickle down effect on a lot of metal companies in India, where they could also benefit from inventory gains. And then copper is at multi-year high. So this is very important for metal companies in India. And I think this could play out in a very big move in the coming days. Actually, this could translate into 5 to 10% move on the index front. So that's all on my radar for today.
Select metal companies, and specifically copper, has been doing well. Yes, we did discuss about that. But Nishal, of late, one of the strong trends that we all have been tracking is the defense pack. What a move that we have already seen in defense and select railway counters, and of late as well, we have seen a catch-up rally over there. But Nishal, what's your overall sense on both the sectors right now? Here too, do you believe that on the recent fall, like for today as well as just yesterday, investors can actually look in to buy some of these counters?
As far as defense is concerned, I wouldn't recommend at all, actually. I think they have more to go. Valuations are at the peak, basically, as far as defense is concerned. Numbers, I don't think are going to actually match up because these are all long gestation period orders, which the market is expecting of 1 lakh crore. That will come, but will get executed over a period of next 1.5, 2 years. So this is nothing going to be immediate, and the market is already discounted it much ahead of time. So I think if you are holding on to PSU, if you are holding on to defense names, I think it could be a good time to actually book profits. Similarly, I think railway side also, if you look at it for the last 2 years, the capex on the railway side has been flat in the government budget. So I do not understand why the railway stocks are doing so well. Because if the capex from the government side, government is the largest, or government is the only entity which drives capex. And if the capex is not coming through, then how come the orders are going to come through for the railway companies? Quite a few of the EPC companies have started refusing or refusing orders or not bidding at all, for the reason the margins have become very low in the railway business. So that also is one thing basically one should be aware of. So I think both these sectors are avoided according to me.
Aditya, coming to you then, closing trading ideas, what will your stock specific idea be?
So first one would be from consumption pack, one stock which had gone through a long period of underperformance, but recently the chart patterns are very encouraging, and the stock name is Pidilite. This stock is seeing good volume buildup, and there are slow signs of accumulation. So I think this stock is getting ready for a good rally. So Pidilite is a buy at 3058, stop loss is 3020, and target is 3120. This is the first one, and in last few days we have seen good outperformance in auto pack, and the leader in the rally was Maruti. Again today it's showing good volume accumulation signs and good price action. So this is a bullish candidate. Maruti is a buy at 12,650. 12,250 is the stop loss, and target is 13,050.
Indeed, a buy call coming in on Maruti. Yes, in this market as well. Since the morning itself, the stock has been holding on to good gains. But Kunal, what about you? What are your closing call ideas?
So that will be a buy on Bajaj Finance. In fact, that's a chart which has started to spring back into breakout mode. I think the third or the fourth consecutive day where the stock price is showing some robustness as well as recovery over the last few days. So looking at a breakout for Bajaj Finance about this 950 levels.
All right, so that's a buy call coming in on Bajaj Finance. Let's watch out for that. So two of the large cap companies being recommended by our experts right now. But with this, Nishchal, would like to thank you for taking the time out and speaking with us this afternoon. Thank you so much for that. But time now to slip into